Sometimes breaking up is hard to do, especially when it comes to a stock. So, how do you know when to let go? We will be speaking about this with my guest today. He is Ian Cassel. He is a microcap investor, the founder of Microcap Club, and also he co authored a book called Intelligent Fanatics Standing on the Shoulders of Giants. Ian, welcome to the show.
It's great to be here. Thanks for inviting me on.
Yeah, well, I followed your work for quite some time, and I think you have incredible nuggets of information and knowledge on your Twitter page. So I invite everyone to follow you. And I thought we would start with one of them. I thought it was timely here ahead of Valentine's Day, and it involves breaking up with your stocks. You say sometimes the worst positions aren't the ones that go down, but the ones that go nowhere. When you and the stock don't know what to do. So how do you know when it's time to let go, Ian?
You know, for me at least, it's quite honestly when management stops executing. And I think that's one of the hardest things with investing is trying to pay attention to the business and not necessarily the stock price, which can be even harder in an environment like we're in where, stocks go up every single day. But, for me, it's really just paying attention to the business, paying attention to management execution. And, that can be very tricky, especially when you invest in small emerging companies like the ones I invest in.
Right. Well, it's hard because you don't want to let go, and your convictions, and you speak so much about convictions, are in there. But I guess are there certain data points you should be looking at of when you know, okay, I got to call it quits now.
Normally, I would love to say there's exact data points, but it's normally when I start rationalizing owning something, when I start making excuses for owning something. And oftentimes, even in a market like this, when things are working, me being a stock picker and me being a very concentrated stock picker, I'm usually in a dozen equities at a given time. And normally when something works, the stock price ascends, it becomes a larger part of your portfolio because it's sort of earned the right to be a larger part of your portfolio. And usually the higher percentage of the portfolio it becomes, the louder your emotions become. And the ones that aren't working, you're kind of looking back saying, okay, come on guys, let's get into action. And that's usually when you just really have to sit back, analyze the thesis, see if management's executing against your objectives, their objectives, and do the right thing. And normally it might be a time to add or maybe to sell and stop making excuses.
Well, okay. So if I take the example of, gold stocks, for example, right? Obviously, I've been in this sector for a very long time. And I think a lot of the rationale is, well, everything is cyclical and I should just tough out and weather those hard years because eventually things have to come back up again.
Yeah, I mean, again, I think it's back to the individual situation. I mean, because even when you're in winning stocks, you're going to go through quarters and even years where the fundamentals are backfilling into a stock price, and so that's one of the hardest things, actually holding
Yeah.
winners, let alone holding things that aren't moving anywhere or going down.
I also want to pull up other words of wisdom that you wrote, Ian. The worst part of bull markets is the rise of inexperienced people educating other inexperienced people. What sectors were you thinking about here when you penned this one?
Well, it's easy to pick on Bitcoin, and I don't want to pick on
I
Bitcoin
didn't want to
because
say names, but
no, I know, but honestly, I could relate that back to some of the moves we're seeing in some small cap and micro cap companies right now, where you just see momentum taking over and them just going up 2, 5, 10x with companies that don't really have any fundamentals driving them. So, I would say we're seeing quite a bit of that in the micro cap and small cap ecosystem right now.
other words of advice from you, you say, if you turn over a lot of rocks, you will pass on many investments that ultimately go up 10 times. It's part of the game. You can't beat yourself up over not owning stocks you wouldn't have been able to form the conviction to hold in the first place. Not every winner is meant for you.
And I think that's hard to do, especially when you're watching other people make money in things that you passed on. It's really,
It
really, really
hurts,
tough. It does
right?
hurt, but I always go back to when I analyzed that company. There was obviously reasons I didn't invest in it, and I do believe that there's certain companies that are meant for you, that are meant for your personality, your strategy, your objectives, and your time frames. And so I don't try to lose sleep over things that I would never have been able to form conviction in the first place.
And I guess it's a good segue into my last nugget here is investing is 5% intellect and 95% temperament. It's a test of how well you can sit quietly and do nothing when your emotions are screaming at you to do the wrong thing.
And I think we've all felt that, successful investing is basically trying to hold our emotions in check and trying not to give into our human nature to do the wrong thing at the wrong time. And that goes towards almost every aspect of investing. That usually goes towards, when a stock is increasing, you want to sell it. And when a stock is decreasing, a lot of times you just want to buy more of it
Right.
because it's cheaper. And a lot of times you're selling their winners to buy more of your losers. And that's where I've made some of my biggest mistakes.
And how do you not get caught up in FOMO? And not to pick on Bitcoin again, but this fear of missing out. How dangerous is it um, to fall into that?
I think it's really difficult um, because I don't believe that. I know for me, the way I invested 5 years ago is not the same exact way I invest today. And I'm going to always be evolving as an investor. And, I think that always does mean that, you try to do some new things. But a lot of times when you make those big leaps and go against, some core beliefs and values with your investment approach, that's usually when you make some really big mistakes.
Let's talk about microcaps now. This is your guru in this sector. And it's about picking the winners. I mean, if we look at Walmart, Amgen, Netflix, these guys all started as microcaps. So how do you know when it's going to be the next big thing?
Oh, well, it's very difficult. I mean, just to give you a little bit of backdrop, there's probably 20,000 equities in Canada and the US. Maybe about half of them are microcaps, so that would be defined as sub 300 million market cap. A lot of people like to beat up. Well, actually, in Canada, I believe 75% of the public companies are microcaps. So when I'm talking to a Canadian and they say I'm not a microcap investor, I'm usually like, no, I'm sorry, you probably are. You just don't realize it yet. But there's a lot of small companies. And a lot of people like to throw microcap under the bus, especially here in the United States. They kind of call it this sleazy, slimy wasteland of uninvestable public equities. But a lot of people just forget that most of the best investors ever, like Buffett, Greenblatt, Lynch, they all started in microcap.
Yeah,
And
and
most of the
I
go ahead.
guess there is a negative stigma attached. Well, I guess in Canada, if many people are in it, is because obviously gold mining and silver mining is such a huge industry in Canada. Do you think it will ever shed this stigma?
I think it will. I mean, up in Canada in particular, you mentioned that it's such a resource-based economy. I think everybody that's Canadian owned a junior mining stock when they were younger, and up until maybe 5, 6 years ago, you had some really great non-resource companies, growing 30, 40% a year in Canada that were trading at 10 PEs that were just unloved and undiscovered even by the professional community up there. We've seen that change. We're seeing a lot of, action in Canada too, getting driven towards the other non-resource companies that are public in Canada. So you're starting to see that arbitrage change where you could find a company trading at 10 PE up in
Yeah.
Canada that would probably be trading at 30 PE down here in the States. So you're starting to get some more respect from up in Canada from some of these companies.
And the Russell Microcap Index on a tear here, Ian, up over 10% so far this year. So is it microcap mania that we're going to be seeing?
I think we are seeing it, and especially when you consider the Russell microcap is around 1,500 companies, and I think 70% of them are unprofitable. So a vast majority of them, I would consider unprofitable, maybe story stockish, so you're definitely seeing momentum hit to these companies.
Just to wrap, when you're going through your list, I know in past interviews you've said you like a business that can grow through a recession, a balance sheet that can weather the storm, leadership, of course, and a valuation that can double in 3 years. Am I missing anything? Would you add anything?
No, I mean, I think when I look forward and people ask, aren't you worried about the market and where we're in? I don't necessarily worry about the market we're in. I'm just worried about or I just think about the companies I'm invested in. I can't control what the market's doing, but I can control the types of businesses I'm invested in. And I'm strictly looking at businesses that can survive, and not only survive a bear market or recession, but thrive.
I know you don't comment on individual stocks, but I need to get your thoughts on what's happening here on Wall Street with Bed Bath and Beyond and GameStop. And is this a trend or a paradigm shift?
It's hard to say. I mean, we have Robinhood traders entering the fold. I think people have been locked up in their homes for 9 months, bored and looking for a little action. I think it's just a combination of everything. I don't know how it ends. I'm not going to say it doesn't end well, but I think to some respect, people like to pick on the public markets and public equities. When you could point to private equity and venture capital, they've been, increasing their valuations on some of these companies 5 or 10x in a year, and nobody complains about that. Now everybody wants to pick on small cap companies for going up 5x. Like that's a bad thing. So there's seems to be like this perception, difference between small public companies and small private companies, which I find interesting.
Lots of good thoughts here. Ian Cassel, thank you so much for joining me today.
Thank you. Thanks for having me.
And thank you for watching. We'll have much more for you on Stansberry, so be sure to stay tuned. In the meantime, keep following us on all our social media platforms. Thanks for watching. I'm Daniela Cambone.